Hi all, my name is Daniel Haugland. I'm an analyst at ABG and I cover Strongpoint amongst other tech and consumer related companies. Today we have with us the CEO of Strongpoint, Jakob Tørbakk. He'll be taking us through a presentation and with that I give the word to you, Jakob.
Thank you so much, Daniel. So I'm going to help you understand as investors Strongpoint. And before we even move into the slide deck, I want to start with something that I think most of us are able to relate to, in particular after COVID, and that is travel. So most of us in the summer holidays, unless we're in the archipelago or in the beautiful Norwegian sea, then we go to the Mediterranean. Personally, I like to go a lot to Spain. And when I go to Spain, I also have this nasty habit of going to grocery stores. And going into a grocery store in Spain or France or Italy or Greece for that matter, it's a little bit like a time capsule going back 10, 15 years compared to what the grocery stores used to be like in the Nordics. And why do I start here? Well, I start here because that's a major opportunity for a company like Strongpoint. We have a set of technologies that we take for granted when we go into a grocery store or when we shop online. That's the potential that we want to take onto Europe. So if we may go to the next slide, just to sort of set the stage for Strongpoint. Well, first of all, we are a company providing solutions to grocery retailers. So that means about 84% of our revenue stems from grocery retail, not sort of other kinds of retail, which means that we are in a very non-cyclical market, a very resilient, robust market. And you could almost argue that regardless of what happens in the world, you need food and beverages, and that's the market that we serve. Lastly, and a point to sort of pinpoint is that we are based out of Scandinavia. Most of the technologies that we have in our portfolio are Norwegian or Swedish by nature. And the high labor cost that we have had and have in Scandinavia has also led us to introduce new technologies that are improving the operations in the store or online. And it's exactly those sort of leading efficiency solutions that we see a big demand for, both in, of course, the home turf market, but also elsewhere. If you go to the next page, please. So briefly about Strongpoint, just so we set a stage. We're not a new company. We are a mature company with 35 years in business. We're listed on the Oslo Stock Exchange, and over the past 4 years, we have worked to position ourselves as a pure retail technology company, focusing on the grocery sector in particular. We have 8 markets: Norway, Sweden, the 3 Baltic countries, UK, Ireland, and Spain, where we have a full sales, service, and support organization. And then we're serving additional markets with partners. Why is that important? It's important because in those 8 markets, we're able to not just push a solution, but also give the customers the confidence that we will introduce the solution, make it work work over time, and then again be able to reinstall solutions. But it also gives us a very nice part of the economic value we're creating, not just by on the sales business, but also on the sales service and support. We're about 1.3 billion Norwegian kroner run rate as of now. And if you were to cut away the 2 businesses that we divested over the last 4 years, namely labels, cash security business, our retail business would have grown by 60%. So it's a rapidly growing business that we have put in place here. So what do I really mean with retail technology or solutions that we offer? So if you go on the next page, I'm going to start off then with some of the trends that are leading to the solutions we offer. I know one of my friends, Magnus Larsson from Pricer, was presenting Pricer earlier today. We're a great partner of Pricer. And he was talking about, amongst others, the importance of the inflationary pressure, the price changes that are happening that are driving lots of price changes, and as such, making the case for electronic shelf labels a lot more viable. Secondly, staff. It's just very, very hard to get staff, and staff in store needs training. With the more and more sort of complex tasks to conduct, you also need solutions to help you train employees fast, and ideally be able to have solutions that lower the manning in total. And then lastly, e-commerce. Although you could argue that e-commerce right now for the past few months have received a sort of a dip, this is very much a market that will be growing over time. And as an example of that is the announced stock exchange message this morning with a major US grocery retailer where we are introducing 20 lockers just as a pilot. So e-commerce is very much alive and kicking, and for major grocery retailers that are able to see through the temporary downturn that we're facing now, also indicates that the e-commerce will continue to grow. So with all these trends, I mean, there are lots of different solutions. With what we do know is that technology is going to be a vital part of the solution to these challenges, but also opportunities that arise. So then concretely on the next page, what does Strongpoint offer? And I have 2 pages here. One page is simply taking the roof off the regular grocery store. We offer electronic shelf labels from Pricer in the 8 markets that we serve. We have developed our own self-checkout solution that is second to none and market leader in the Baltic countries. We have a cash management portfolio that is very much alive, still in Norwegian, Swedish grocery stores, where it's more about maintaining and managing the development of cash as we see it, but growing massively in other countries, including Spain, South Africa, and others. And I'm not sure if I'm going to go through all the solutions. The point being, we have a number of solutions here, from protecting high-value items with VenSafe, scales to ensure that you actually get what you're buying, and then even also humanoid robotics, where we have invested in a Norwegian-based company called Halodi Robotics to do repetitive tasks, for instance, restocking. If we then go on the next page, we're looking at some of the e-commerce offerings that we have. I believe we have probably the most comprehensive e-commerce portfolio out in the market. We have a best-in-class in-store picking solution. This is, by the way, the picking solution that's being used by Swedish grocery retailers when you see picking in store today, reaching efficiency levels of 240 items or more, which is just unprecedented in the industry. We have a dark store module that we use for utilizing the same picking solution, but then in a dark store, not a regular store. And we even now have complemented our solution with a partnership with AutoStore, the Norwegian giant, the second largest IPO in Norway in Statoil, to provide the AutoStore solution to the Nordic market, and also recently announced the UK and Irish market. So great opportunities in the picking. What we also offer is the full range of last mile solutions, stemming from both grocery lockers, again, Sweden being probably one of the highest penetrated countries in the world with regards to grocery lockers, home delivery solution, as well as in-store picking solution and drive-through solution. So we offer the whole range of e-commerce logistics solutions for grocery retailers. We can move on then, because I hope then for any new listeners to Strongpoint, then you know a little bit about what Strongpoint does. And I wanted to move from here to talk about the Strongpoint Sandwich. After all, we are in the grocery business. And so when we talk about the bread and butter of Strongpoint, those are really the in-store solutions, the mature in-store solutions that have been around for a long time, whether it's our cash card solution, self-checkout, Vensafe, electronic shelf labels. This is today providing us an EBITDA margin of 11 to 12%. So we have a very solid, profitable business in the in-store solutions that we call bread and butter. But everybody knows, in particular Norwegians and Swedes, that you can't just have bread and butter, you need some topping. So if you push one more button, then you get some topping on the sandwich. And this topping is really our e-commerce solutions. This is the picking solution that is by far the market leader in Sweden, that we're now working to get out to additional economies out there, Spain being a notable country as well, and as I said, the US with interesting grocery customers there. Today we're investing deliberately and significant in e-commerce. It's not yet giving us sort of a positive EBITDA, but of course, with the growing market, with the picking solution in particular, that is yielding a payment per pick or payment per order, this will be very, very profitable business over time. And then also lastly, if you want a proper sandwich, you need some sauce on top. And the sauce on top, that's really the tomorrow's solutions. We're not just stopping and being satisfied with what is in high demand right now, but also looking ahead. So when we are, for instance, working with Hello the Robotics to provide a picking solution or a reshelving solution for stores, we know that that is something that will be in demand over time. We're also, of course, examining the next frontier of checkout solutions. So moving from man checkout to self-checkout to even autonomous checkout solutions. We're, without revealing too much today, something we're also exploring with partners. So that's the Strongpoint Sandwich. I hope we gave you a little bit of flavor of where the profits are coming from today, where the investments are being spent, and also where we're heading in the future. If you go on the next page, please. One area in which I'm very positive about on behalf of Strongpoint is the white space opportunities. So on this page, you will see the different countries listed on the one hand side. You'll have the grocery chain penetration. And as you will see, we serve all the grocery chains in Norway, all the grocery chains in Sweden, and all the grocery chains in the Baltics. Whereas in our newly acquired UK and Irish market, we are very far from having a full penetration, and the same in Spain. Two mammoth markets. And just to put it in perspective, right? A company like Tesco's in the UK is 3 times the size of the entire Norwegian grocery market. Spain with Mercadona, twice the size of the entire Norwegian grocery market. So these, of course, are exciting and huge markets, not just because of size, but also because of the time capsule analogy that I used in the beginning. And you see that on the solution penetration, which is the next column here. So even though we have a 100% penetration with Norwegian, Swedish, and Baltic grocery customers, we're very far from having a full penetration of the solutions. So as examples, I mean, in a country like Norway, there's still ample opportunity for the Vensafe solution, that protective solution for high-value items. These self-checkout solutions that you've seen in Norwegian markets, where you're still struggling with sort of, say, getting fruit and vegetables correctly scaled. Sorry, that's was just a team celebrating a stock exchange message that should have been South Africa with 250 cash cards. So cash is not dead in that part of the world. But beyond that, in Norway, what you have is of course e-commerce. E-commerce in Norway is to the most extent being defined by a pure player, Oda. So clearly, I mean, all the Norwegian grocery chains will be looking at some sort of e-commerce offering in the future. Not going to go through all the countries, but take Sweden as well. Still lots of opportunities in e-commerce, although Swedish retailers have been a lot faster than Norwegians to move on e-commerce. There's still a lot of automation to be done in the market. ESLs likewise. The Pricer sales have been going very good this year, but in terms of penetration, it's far away from the Norwegian penetrations we see. Of course, if you get down to UK, Ireland, and Spain, their solution penetration is even less, right? And now that we also have out the cash management sales in South Africa, I think it's fair to say that cash in Spain, however old-fashioned it sounds, is still about 60% of all the transactions, which means there's a huge amount of cash that needs to be handled. We have a very, very mature technology to handle that. Same goes with the e-commerce price labels, electronic price labels, and self-checkouts. These are all solutions that I strongly believe that we can take from the Norwegian, Swedish, Scandinavian market into the larger European markets and create lots of value. So that's the white space opportunity in short for a company like Strongpoint. Could I move to the next page, please? Some 4 years ago, we set forth the 2025 ambitions, and those were threefold. One, to provide to create a pure grocery technology company. And with the divestments and acquisitions we've done, we are very much on that path. We have a 2.5 billion kroner revenue target, up from today's running 1.3, and an EBITDA margin target of 13 to 15%. So how are we steering towards these things? Let's move to the next slide, please. Well, some recent news that we've also seen very well appreciated in the market, not least from our customers, are some of these recent news. Number one is the fact that we saw a year ago became a AutoStore partner. And in about 6 months ago, we landed our first AutoStore deal with Aktier, the Norwegian international, I should say, 3PL company. But then also now are installing the world's first AutoStore with 3 different temperature zones. So not just ambient and chilled, but also frozen. And that is in itself it's a world news. This is the first time in the history of AutoStore, and I think in the history of similar retrieval or automatic storage and retrieval systems, that a frozen solution is being installed. That means a lot for grocery retailers that obviously needs to handle all the 3 temperature zones. We've been getting a lot of attention after that, and right now the focus is on making sure that this first installation is a true success. Secondly, it's the expanded partnership with Pricer. We have jointly in Norway, Sweden, been very successful, Baltic likewise, but now we've extended that to include entire Spain, but also UK and Irish market. And you can tell by the, well, I have a big smile, but I think Magnus has an even bigger smile than I have. We are very, very prosperous about what that could yield, in particular in a country like the UK, where the ESL or electronic shelf label penetration is very low, whereas the conditions are certainly a place to start using ESLs a lot more. And also with the acquisition of the company called ALS Global in UK and Ireland, we were also now recently granted the AutoStore distribution rights for this market. So lots of exciting things happening that will have a significant impact on the growth of Strongpoint in the next few years. I think we have one or two more slides, and then we'll give the question over, or the answers, or send the word over to you, Daniel. But want to round off by why should you invest in Strongpoint? Well, I think number one is the fact that it's, to the extent you can use a word like safe. I mean, this is a relatively safe market we operate in, the grocery market. It's stable, it's growing, without very many exceptions. They're highly profitable. It's not like we have any credit risk outstanding with any of our grocery customers, and you kind of need food and beverages. Secondly, we're not a new kid on the block. We've been around for many years, and that sort of customer relation, that trust that we're having with our customers, also provides us with the opportunity to bring new solutions to the table. And of course, in that respect, it also helps to have a very solid balance sheet. We're a trustworthy company also in that respect. We have today 0 debt. So there's 0 debt. There's inflation or interest rates can go up as much as they want for our sake. We have 0 debt. And lastly is the growth. We see a significant growth opportunities with existing customers that we have in the 8 markets we are, but not least growing with new customers and with additional solutions, and then most notably in the new economies, I should say, UK, Ireland, and Spain. And I believe that was the last page before there is a thank you page.
Great. Thank you, Jacob, for taking us through all those points. I have a couple of questions that I've plotted down. So I think we can start basically at the beginning. So talking a bit about trading conditions, because you talked a bit about how the grocery retail segment might be a bit more robust and non-cyclical than the other retail categories. So I was just thinking, could you maybe add some color on how have you seen customer demand develop this year versus other years, and how do you see that maybe developing going forward, or at least what are your customers saying?
Well, I think, if you look at the grocery market as a whole, I think you see across the board a general shift towards discount and private labels in a world where household financials are being strained. So of course that also impacts grocers. I mean, we see a lot. I think it's fair to say we see a lot more sort of detailed needs to understand solutions before you end up with the investment decision. But that said, I mean, most of our, if not all of our customers in the grocery space are, they're not newcomers. They've been through downturns before. They're typically very financially strong, resilient, and see this also as an opportunity to get out stronger on the other end. So I think, yes, there's some hesitations on investments, but in general, this is proving very well for grocers. Just the only other, it's fair to say that, moving into something new, say e-commerce, I was almost like expecting that to take even longer. But again, I think, the announcement that we posted this morning on grocery lockers in the US is telling us that although the market for e-commerce is looking somewhat harsher in general, the retailers see this as an opportunity to position themselves.
Thanks. Then I think we can move a bit over to your expansion into some new markets. So you bought ALS earlier this year, went into UK and Ireland. Could we maybe talk a bit about the potential here? Obviously, you did show a bit on the penetration slide. I don't know if you can go back a couple of slides to that slide. It was the white space opportunity slide. And I just wanted to touch a bit on looking at basically the coverage and the penetration here. So if you start, we can start on the right side with the solution penetration, obviously low in some of the new markets. where should we think this can stabilize over time? Is it fair to think that it could go towards, let's say, 100% over time, or is it more like, do you think will stabilize at some lower level?
Well,
how are you thinking about that?
Yeah, I think, I think first of all, even if you look at sort of the mature market for Strongpoint, Norway, Sweden, and the Baltics, I mean, there's still a lot of white space, right? Sometimes we think that we're fully penetrated the market. We have not. So there's lots of opportunities even in those areas, and that will provide us with a the relevance to customers and a nice growth also in the future. I think obviously that the big upside here lies in the much larger economies, UK and Spain, right, where we are a lot smaller. And what I would describe the situation like today is that in the UK and Ireland we have a platform with the ALS acquisition to grow. We have a platform to take over solutions and some of the most premier third-party solutions like Pricer, ESLs, and AutoStore into this market. So that's a huge opportunity, clearly. Whereas in Spain, I think we have additional opportunity to build that platform even further, right? So we're not sufficient. We don't have a sufficient organization today to cover that market as we should, and that also provides us with additional opportunity to grow in this very exciting market.
So then you didn't talk about this in your slide package, but I was just thinking we could maybe touch a bit upon the margin, call it outlook into next year. Obviously, you typically don't guide on anything, but if we could just discuss this year, we've seen call it quite big contraction of your reported EBITDA margins, but noting that you put all of your investments through the R&D on the cost in your P&L and not under CapEx. That explains a lot of it. So in the Q3 report, I think you said that you will be slowing this a bit down given what we're seeing on the e-com side now. How should we then think about the margin picture going forward there for the group as a total?
Yeah, no, I think so. Thank you for enlightening the listeners that we are in that respect conservative, costing all the expenses. So you won't find any big items on the balance sheet. But regarding the development of our margin, I think what is fair to say is that what we have disclosed is the fact that we do on e-commerce see a very nice margin. And that was, of course, during the COVID, very good for us. We saw our part or share of revenue going from 5% to up to 13% of the total revenue. With the COVID contraction and with the war and the uncertainties that stems out of that, it's sort of back again to 5-ish%. At the same time as we have been significantly investing in partnerships, in new product development, in sales resources, and that has sort of impacted clearly the margin levels that we have been able to achieve thus far in 2023, and that's sort of the reason why, if not sort of contraction, at least is a shift of resources to where we see there's being a big demand. For instance, in self-checkout or even in cash management solutions, we see there's a bit of a revival right there temporarily. Going forward, we still believe very much so in e-commerce. It's anybody's guess how fast it will recover, but I think if you look at the long term of e-commerce penetration across different across different retail sectors, the arrows go one way, and that's up. I'd go as far to say anybody that believes that e-commerce will disappear is as wrong as saying internet would disappear in the 1990s. It's not going to disappear. It's going to go up, and I think today is a unique opportunity to help our customers by making that e-commerce offering profitable. And I would like to sort of hail some, I wouldn't name drop, but hail some of the Swedish grocery retailers that are achieving this by having a very highly efficient in-store picking solution and a locker solution that provides the most efficient, cost-efficient solution for e-commerce. And you can just imagine taking something like this to the UK or a Spanish market. That means a lot, and I think the market is ripe for that in the years to come.
Great. I think that basically rounds up our time this time. I want to thank you a lot for taking the time, Jacob, and we look forward to the next quarterly presentation and following you into 2023.
Thank you. Pleasure is all mine.